Good afternoon, and this is the wrap-up for Wednesday, April 13th, 2022, Quant Trade Edge. So natural gas was something we were looking at yesterday, and because it had this anticlimax pattern, if it were to have taken out the low of yesterday, I was looking for a 4x trade to the downside. Well, that didn't happen. You can see how we pointed out the 660 level and how significant that was yesterday, where this flush dropped all the way to 660 and then 660.1 and then 661.5, and we just kept making higher lows into the afternoon. Well, that turned into more parabolic action, as you would expect from the extended run. Now, how do you get into something that's acting parabolic? I guess it's somewhat like making love to a porcupine. You do it very carefully. We had somewhat of a vol compression pattern here. It didn't quite compress as much. Well, I guess on the second part it did. On the first part it didn't. But really, this is another variation of the 4X. When we took out the previous day high at 694.7, blow up these bars and see what we get. Broke it on this bar, continued up, 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 up. From this point, we had a very clean ABC, and our risk bar was this right here, about 4.4 cents. 4.4 cents. So 4R on that was around 609, and just heard a ding. 709, and just heard a ding a little while ago. Within this, there's plenty of opportunities to also scalp, but this is your framework for what direction it's going. And I wanted to point out one more interesting thing, and this is something I call the Moc trade, which I typically do in the S&P. But just to show you how it works, it's really the concept that there's someone out there with an incentive to manipulate the closing price. And with natural gas, the pit closes at 12:30. So this was the actual close. And that close was 6.997. And if you look at the 5 minutes leading up to the close, we kind of went down, had this little pop, and then this high volume here, beating it down and getting it to close under the big round important $7 level. And why would someone do that? Who knows? Someone could be short options, someone could have margin requirements that are set based on the close, someone could have an over-the-counter deal based on the closing price. So there's a lot of reasons. There's one-day options that trade in the broker market. So there's a lot of reasons why that could happen. But then you notice that as soon as that settled, that pressure was lifted, and got up to 704, kept going, 708, kept going, 709. You can see it better here. Once that close was done, it's been one-way ticket. Anyway, interesting aside. Now, moving on to crude. We liked crude because of this breakout from the wedge pattern, and we were going to look for a 4X trade, but today was also EIA. So it's not advisable to get your position on before the EIA release, the inventory release, because this is what happened right here. This high volume bar, big tail, flushed everyone out, and then started going higher. So for me, getting the first bar that closes outside of the EIA range is a good entry for me. So I would enter here with a stop below here, and it achieved about 3R to the upside. Still looks constructive, so we'll see where that goes. If we take it back to the daily, the next swing high is at 105.59, so that would be the next point that we would expect this to hit. After that, I wanted to actually go over a couple of stocks that I'd mentioned in the wrap-up a while back. Let's create a new thing for this. These were uranium stocks. And they are continuing to perform well, and the setup is still very valid. But this one in particular is URG. We could take it to a weekly, and you can see higher lows, higher lows. On the daily, we have this triangle pattern that's breaking to the upside. And, this is almost a cup and handle type pattern, although this handle is rather loose as opposed to tight. And then UEC was another one, was pointing it out when we had this little wide handle-ish pattern, and you see what happened there. That's pretty much what I would expect to happen to this one also, which means new highs above this $2.15 level. Cameco is another major uranium. This one's already kind of broken out. There's not a lot of, there's possibly more room. It's just, again, it becomes hard to buy these things that are several days into their breakout. Keep an eye on silver. We continue to go higher after that P1 setup. Just kept going higher. Now we've broken this trend line here. 1, 2, 3, 4. This is going to be the 5th PF3 in a row. Very powerful breakout, as we suspected would happen from the P1. Gold, similarly, it took one day of rest, and then it's printing PF3s again. It's in the process of breaking out here as well. Again, it gets very hard. You've got your RSI2, yesterday at 97, today 98, getting very overbought. But if you look at this, you've probably heard me say that markets are fractal, and what I mean is things that happen in the high time frame copy themselves in the lower time frames, and it's all very similar. This is a monthly chart of gold where we basically have a cup and handle forming, and this handle is higher, but gold being something that measures the dollar, if we were to look at it on an inflation adjusted basis, like I wonder if looking at it in terms of euros actually helps. No, not really. What about in terms of oil? Nope. In terms of copper? Nope. Okay, let's just go back to gold. We could take it, take it back to a weekly and notice that this is that cup we were looking at, and now this handle looks like a cup and handle, right? This entire thing is really just the handle of the monthly pattern, and it's starting to look like a cup and handle. And if we take it down to a daily, well, the daily, this is just the second part of the handle, and it's starting to form a cup, and it could get up here and do a handle thing, and eventually we'll have a cup and handle breakout on the daily that will take us into the weekly and the monthly pattern, and that's how we will get asymmetry on that. And then the last thing I wanted to show you was on the S&P 500. I posted this on Twitter. It wasn't textbook, but it was close enough to look at and to trade carefully. But this is a cup and handle pattern on the S&P. Let's put our volume in there to take a look at that. Fairly green volume all the way across the right side of the cup. More red, obviously, on that side of the cup. Little bit of volume compression in this range here. And did we get our ATR 330? So we did at this point, at the absolute low. In fact, I'm rather happy about this new thing I programmed that gives us the symbol on the bar itself. So as we're looking for the bar, this bar right here gave us the ATR3 divided by ATR20 of less than 0.7. I'm going to do a little further research to see if that's actually a valid trigger bar just for that purpose, because it looks like it is in this case, but it could just be this one situation. But that would be amazing if we're able to hone our risk down to 1 bar versus just this pattern, which is currently pushing up to about 1R from this right here. So if that's your pattern, we're barely getting to 1R right now. If we could narrow that risk down to a single bar or a group of 3 bars, that would increase our asymmetry on these patterns here. Looking forward to tomorrow, of course, it's going to in part depend on how things end up today, but the NASDAQ is doing what we thought, which is give it a day to fill in, and then tomorrow this will be a great setup. And it's a great setup because it is the 2-legged pattern on the daily, much like we had in the Australian dollar a while ago. This was a red candle. I like to see this green filling it in, but hopefully not taking it out. We're pretty close to it, so anything's possible, but I would prefer it not being taken out until tomorrow. That's going to be our best setup. Natural gas, it is very overextended. It's just a difficult market to trade right now, so unless something else sets up on it, just going to be watching. Gold and silver, same thing. They are a little bit extended, so it's not going to be a place where I want to enter new positions, but just keep an eye on them. Nothing great going on in copper. The euro has potentially put in a bottom. This is something I would do a 4x trade on to the upside, because we also tagged this low, so we left a trapping pattern and a good setup bar, so that would be a good setup. And similarly, the Australian dollar, it's had a little bit of time to repair itself. We do have a little bit of a 2-period rate of change divergence going on here. The setup bar is not perfect. Definitely if we took out this high, the 75.002 level, that would be a little cleaner. If this can close green, then taking out this bar might be sufficient. But the euro setup looks a lot better. So for my FX trade, I think I will stick to the euro. Among the indices, the NASDAQ seems the best. The S&P, is similar. So, I guess you could do either one, the S&P or the NASDAQ. And that was it commodity-wise. I don't think there's anything setting up particularly well. So anyway, that was the wrap-up for today. Hopefully you caught some of these things that we pointed out on the daily wrap-up from yesterday. And if you have any questions, please continue to ask them. I'm happy to answer.